Today with us we have Mr. Naveen Bada.
Probably my luck wanted me to become a chartered accountant and not an engineer.
One unique quality a finance person should have.
I think the ability to decide with incomplete information.
The title.
Book is all about how as a leader in the current situation, in the given context, how you lead the teams, how you navigate the challenges and move beyond the numbers, right?
So what are the 3 financial habits that every entrepreneur should have?
First, preserve cash. The second, invest your money into your product innovation. The third, don't
Your
just
final advice to the all entrepreneurs.
think of finance at the beginning, don't think of finance at the end.
Hello everyone, welcome back to our channel Built on Brilliance. Today with us we have Mr. Naveen Bada. So he has 20 plus years of experience as a finance officer. He has worked with a lot of big companies as a CFO like Nivea, L'Oreal, and now he is working with SUGAR Cosmetics. So this video is important for any business because finance is one of the most important pillar of any business, any company. Even if your company is running, making a lot of money, but if it is not able to book profits, then still it is a problem. So if you are a startup or if you are a small company, what are the things that we can do and easily implement in the business that we'll learn from Mr. Naveen Bada. So I welcome you, sir, on this podcast for giving us your time and making this podcast possible.
Thank you, Sunit. Thank you so much for the opportunity. I'm really looking forward for this podcast and willing to share my experiences to your larger audience. Thank you so much for the opportunity.
Thank you. So we'll start with your personal journey actually. So how you decided to be into finance, because this is something that most of the people hate, because what is credit, debit? Still I am confused.
So mine is also not a very different story, Sunit. So even I used to hate debits and credits, and I call it myself as CA by accident because I never wanted to be a CA. Of course, I ended up becoming a chartered accountant. So I started my journey. So I'm not a commerce graduate. I'm a BSc mathematics graduate. Never wanted to do a CA course. And always wanted to pursue my career into engineering. That is where I was very keen and very passionate about. But as all of us know that you need to have luck to make your career, especially in India, because of the high competition, is where probably my luck wanted me to become a chartered accountant and not an engineer, and hence I ended up becoming a chartered accountant. When I landed in Mumbai way back in 2001, I also had the same feeling. I didn't know what is debit and credit, and hence I started my journey as a CA professional. Interestingly, when I talk about my career journey, people think that I'll talk about designation, people think that probably I'll talk about my organization, but it's not about designation. It's not about the organizations which you worked in. I think it's about the transition which I've seen in my 20 plus years of career, and I'll try to take you through some of those journeys. So as any finance professional would begin his or her journey, I also began my journey thinking that if I'm very good in technicals, if I'm very good in debits and credits, if I'm very good in accounting, tax, I'll be a great professional. And that's where I started my journey. But over the period of time into multiple organizations, I realized that numbers doesn't alone would make you a great leader. It's about your perspective. It's about your judgment, which
when did you realize this actually?
So this happened over the period of time. So it was not a moment wherein suddenly I realized. Even in the course of all my organizations, I got this lesson from my mentors, from my seniors, that numbers would not take me to a CFO level. Of course, numbers are important, no doubt about it. But at a leadership level, you need that judgment. What a leader does, Sunit, you tell me. A leader doesn't speak about numbers itself. Numbers is important, I keep reiterating. But as a leader, we talk about the numbers are there. Now, how do we take the organization forward, right? Let's say for an organization, the top line is not happening. The growth is not happening. So the numbers would be there. But as a leader, we need to take a judgment whether the organization is still valuable, whether the organization we can still take it to the next level, or we just don't take it, right? So there is an element of judgment, and that's the biggest career transition which I've ever seen in my career so far, that how as a leader you move from numbers to judgment, right? To summarize this, Sunit, I always keeps telling that uh, numbers would reveal the past, but your judgment would tell your future, would
Great.
tell the future of the organization, and that's what the transition has happened in my career so far.
So when you talk about judgment, is it person specific? It doesn't depend upon numbers. That's the reason I'm telling you. You may have a different judgment. I may have a different judgment. Is it that, or
So judgment has an element of subjectivity. There is no doubt, but judgment cannot be too different, right? So judgment has to be backed up with the numbers, with the data, and that's where I think I, as a finance professional, come with that expertise. That and hence I said numbers alone doesn't make your career. It's numbers with judgment is what it makes your career. So, of course, judgment would be probably different for you versus what I will judge the situation. But it is more about how do you assess the situation, how do you think that that situation is going to help you and your organization, and accordingly take a call. At the end of the day, it might so happen that the call which you took probably might not work 100%, but that's how you as a leader have to take. So very interestingly, gone are the days when people used to wait for the 100% information, right? And then you take a call. Nowadays, it's all about agility. It's all about how quick you are able to react in the market. For example, if your competition has done something, now you can have month end to come to to have the full set of data, full set of numbers coming to, and then take a call. Or you have a situation wherein during the month you know what the market pulse is, right? And you take a call. You take a judgmental call saying that, okay, if my competition is doing something, why not to react? Or shall I react or shall I not react? Yeah. So that is where the shift has happened.
So you have worked with well-established organizations or companies like Nivea and then L'Oreal. And how is your difference in work at Sugar Cosmetic, considered to be a startup?
So it's a very different
challenges you think that
setup. Yeah, it's a very different setup. I mean, I can tell you, you're not the only one who keeps asking me. Whosoever meets me for the first time, everyone asks me this question that, how things are different. Of course, things would be different, right? Organizations like Nivea, organizations like L'Oreal, they are far more matured organization, global setup. They have global systems to support your businesses in India. Global processes to help you navigate some of those challenges, and vis-a-vis an Indian company who probably doesn't have the global support. But then every company has their own pros and cons, right? For example, in your global MNCs, you don't get a liberty to do things at your own because you have to follow certain processes, right?
True.
At times there is lot of I would say democracy involved, because you can't take a decision basis what your gut feeling is all about. You have to involve 10 stakeholders to say, okay, this is what I'm trying to do. Do you support this cause or not? And if majority of them doesn't support, you can't go ahead. And that's where I said at times it's more of democracy. Vis-a-vis in the current setup, it's more about A, your gut feeling, B, your agility, and your risk bearing capability. Yeah. So you take calls, you take decisions basis your own assessment of how much risk you are willing to take, and accordingly you move on. So yeah, the work culture, the things are very, very different, but that's what the role makes it more beautiful.
Okay. So yeah, coming back to your book, actually, it's a very interesting book and an interesting title. Why you have chosen that title, Leading Beyond Numbers? Because your profession is all about numbers, right?
So when I was writing this book, and when I was sharing this thought process with some of my mentors, even they asked me this question that what's the significance of this title, Leading Beyond Numbers? And if you read my book, that's the first thing which I've mentioned, that this book is not about finance. In the entire book, it has 15 chapters. In the entire book, you will hardly see any numbers. Probably it doesn't have a number, right? This book is all about how, as a leader, in the current situation, in the given context, how you lead the teams, how you navigate the challenges and move beyond the numbers, right? As I said, the role of a CFO has moved from numbers to decision making. Yeah, numbers would tell you the past. Your ability to decide or your ability to lead would decide your future, and that's what the role of a CFO has evolved now, right? We are no longer the only custodian of the numbers, right? Which is where probably 10 years back the role used to be that you would recall any finance guy as someone who is number cruncher, probably someone, let's say, coming up with tax, coming up with budgets. This guy is cutting the budget. So these are typical things which gets associated with finance.
Right.
But nowadays, finance is more about how can I be an enterprise value creator? How can I be someone with whom my CEO or my board can rely upon and take business decisions? And that is where I think this book comes handy. Because this book is all about how do you lead beyond numbers. Numbers would tell you the story, the reality, but basis that story, how do you decide, how do you move forward is something this book would tell you. So this is about how do you move forward beyond with the numbers, with the numbers, and then take the business to the next level.
As you mentioned that there has to be a leadership quality and there is a gut feeling or decision making that is involved. That is the reason you have mentioned leading beyond the numbers. But looking at a present scenario, there are a lot of companies in India. As you mentioned, you were working with foreign companies and now with Indian company. How many CFOs do they get that kind of liberty till date actually? Maybe some people are blessed, maybe it is not percolated everywhere. So what is your understanding about an overview of an Indian scenario on this?
I would have a differentiated view, Sunit, on this, that it is not that if you are, think of it like this, that if you are a value creator in the organization, if people see you as someone who creates value for the organization, why would someone not involve you? As simple as that, right? So it's not about whether the CFOs are being given the opportunity or not. It's about whether CFOs are able to prove their capability, right? If you think, if you as a CFO, if I as a CFO think that I am the value creator and I have demonstrated it, that in the need of the hour, I can stand up and guide the organization to a scenario wherein the organization move forward, then why not I as a CFO would get an opportunity? So to me, it's all about how do you create value to the organization. I keep saying this, that CFOs have to move beyond calculations. They have to move beyond spreadsheet. And there's a jargon which I use, that the CFOs have now moved from a calculation to a compass, right? If you ever do a voyage in a ship, right? There's a guy who actually holds the compass and navigates the ship. I'm talking about a scenario wherein the old ships, right?
Where there was a compass which was showing north, south.
Right. So, and to me, that was the most important guy, even more important than the captain of the ship, because he's the one who's actually navigating in the darkness. When you do a voyage in the sea or an ocean, it's completely dark. But that guy would actually navigate you and take you to the right shore. So the role of the CFOs have also moved from calculators to a compass, because we are now the guiding light for the organization. We have to navigate the organization to the right direction. We have to take the organization to the next level, and that is where I think the CFOs would have the chance and the opportunity to create value, not just for themselves but also for the organization. So if the organization, if the board, if the CEO, if the MD of the company thinks that the CFO is a value creator, I think there is no end to a CFO being contributing immensely and heavily for the organization.
Great. So as I understand, it should be a proactive effort that a person who is into finance, who can be a contributor to the decision makings, right? If he has to be a productive person, and then there are limitless opportunities, I guess.
Correct.
If I have understood it
correctly. Correct.
Right?
Absolutely. Absolutely.
So very interesting book. So which is the most interesting chapter in your book that you recommend everyone to read?
So to be very frank, I'll recommend everyone to go through the entire 15 chapters. It's actually a very interesting book. As
this
I said,
is a book.
So So this book actually has 15 chapters, and
Okay.
each chapter is as I said, it's not about numbers. It's about beyond the numbers. Each chapter would have a my experience of my journey so far, and of course, my mentors, my seniors, the people whom I have seen grown up. Some of those experiences are being shared in this book. But to answer your particular question in terms of what specifically I would recommend, this book actually I would recommend that all the CEOs should involve the CFOs at the beginning of the idea, at the conception of the idea. What happens? And again, think of a finance guy, think of a CFO. Typically, organizations would reach out to the CFO or to the finance guy for budget approval. That's the very common thing, right? That, you know what, we are doing this project. This project would cost X amount of money and we need approval. Do we have budgets, right? And that is where the CFO used to get involved. I think that's the biggest mistake any entrepreneur would do now, or any CEO or the MD of the company will do now, right? If you involve CFO at the beginning, at the inception, then I think CFO would be able to guide the organization to the right direction. Don't involve the CFOs at the end. Don't involve the CFOs just to approve the budgets, or let's say, if I can call it, like, just to validate the idea, but use the CFO to shape the idea, right? So if you involve the CFO at the very beginning, he would be actually able, he or she would be actually be able to shape the idea, not just validate the idea. What happens when you ask for a budget? You are actually asking for validation of an idea, right? That I need this much of money to make this idea to life. So you are actually asking him or her to validate. Instead of validating, why don't you involve him to shape the idea? When you are conceptualizing the entire idea, involve him or her and take his or her experience, his or her expertise to shape the idea. And I'm sure if that happens, organization would have immense benefit from the CFO's expertise. And that's what I would recommend in this book. Specifically, this has a lot of chapters, and this book would actually help the CEOs or the MDs of the organization to get the right CFO and to get the right expertise of the CFO.
Okay. So what made you to write this book? What was the gap that you found that made you to write this book?
Interesting question. Interesting question. So typically, again, you coming from a non-finance background, I ask this question to you. If you think of a finance book, what typically would come to you?
See, typically it comes what we have received, what kind of taxes we have paid, and what is remaining with us as a profit. Because as an entrepreneur since last 15 years, I am struggling with cash flow. It's the biggest challenge, and beyond that, projections and everything, means it's very difficult for me to understand, because sometimes things work, sometimes things don't work. So for me, as if now it's just in compliance that we are doing, and at the end of the year we are just calculating how much money we made. So this is a layman's understanding, right?
Absolutely, and this is what I also realized when I used to speak to a lot of people other than finance, right? Typically, finance is associated, if you think of a finance book, people would say, okay, this book probably would have numbers. This book probably would have cash flow, as you said, balance sheet, ratios, or some analysis, right? This is typically a finance book would typically look like. And that is where the thought came to my mind that finance is not just about numbers, Sunit. It's beyond numbers, right? We do a lot of things which doesn't just reflect in numbers, right? And that is where when I saw, I couldn't find a relevant book who caters to this side of the finance, right? And that is where I thought of writing it. It's an interesting story that way back in 2018, I was in Mumbai Marathon and with one of my CEO of the company, and interestingly during that marathon, I just casually chatted with him that he wrote a book, and I said, I read your book, it's very interesting. At some point in time, I also want to write a book. I'm a good orator. So he said, Naveen, if you want to write a book, don't wait. As and when things come to your mind, just start penning it down. And that's where my journey of writing this book started.
Interestingly, that was really an interesting gap that you found, because the MSME organizations that I have seen, still they don't have a CFO. even if they are at a bigger level, still they don't have CFO. That is what my understanding is. But more well-established companies, big MNCs, yes, definitely they have. So I think so. There is a lot of scope for finance to evolve and understand in India, I guess. That's my understanding.
Yes, and again, I feel sad about it that companies again think of CFO only when they become big, when they have profits, right? Again, we have to move from a calculator to a compass. If you think that the CFO is a compass, then the moment you start your voyage,
Okay.
you need someone to navigate, right? And that someone can be the CFO, right? So so I feel sad, as I said, because it's very common in most of the companies that they don't hire a CFO or a finance head until unless they are a reasonably big size company or profit making company. And that is where I think many companies fail, because CFOs or the finance heads can shape the idea, can navigate the organization when it's into a nascent stage, and of course with the expertise which we bring in terms of compliance, in terms of discipline, because financially we are disciplined guys. So with those elements, I think the organizations who hire a finance guy at an early stage have a better chance of succeeding than an organizations who hire a finance guy at a later stage.
Okay. So when we are talking about hiring also, um, from my perspective, in India, we also have a bigger challenge of resources actually. It's not only in finance and engineering, in any field you take, finding a resource who can justify the job beyond the certain limits or have that zeal to do something beyond his profile. It's very difficult. So how do you see in finance sector, how is the resource problem in finance sector?
It's actually a very big problem, and you actually rightly pointed out the problem with the finance professionals right now are going through. We get engrossed into so much of technical things, so much of core job that we don't, beyond a point we don't think. And that is where I think the biggest challenge in finance is coming. To some extent AI is actually helping us, because now with the help of AI, with the help of technological intervention, the finance teams are getting bit of time to do much more than what they currently doesn't do, because they don't get time, right? But yes, the capabilities in the finance sector to think beyond numbers, the capability in the finance sector to be a guy who can work shoulder to shoulder with the board, shoulder to shoulder with the CEO of the company, it's a bit of challenge. It's a bit of challenge, and I think that is where person who has the ability to think 4 steps ahead, who has the ability not just to analyze the numbers but also to understand the consequences of those numbers. I think if someone has those capabilities, there's a very high probability that he or she would be highly successful, because there's a scarcity. So that maybe a decade back, right, there always used to be a scarcity of data. We as finance guys never used to get 100% data on time, right? And hence data was always seen as a challenge. Now with AI, now with technological interventions being in place, I think there is abundance of data. We get data on a click of the button. We don't have to wait for someone to give the data. We have live dashboards coming into our desktop, right? We have real-time accessibility of the data. So I think nowadays the data is not a scarcity. The judgment, the capability to think or capability to do a meaningful analysis of the data is a scarcity, and hence to that extent the resource availability in finance is also a scarcity.
Okay, so with this I just wanted to tell to the audience that are who are watching, who are pursuing their careers, how lucrative is finance sector also. Can they make a big career? Because you have set an example by working in such a big consequently in a bigger organizations. So how lucrative is this field also? So can you just tell us to advise if anyone wants to be a finance officer?
So no lunch is freelance, Sunit, and of course there is huge opportunities in finance to become really successful. You have to spend time, you have to put a lot of efforts, but if you put those efforts, if you have the right mindset, if you have the right skill set, right, if you can be that navigator of the ship, then you are the most important person in that ship, right? And that is where the finance professionals who are able to demonstrate that they are the navigators of the ship, then they become automatically important. The role of CFOs have immensely changed in a decade or so. Uh, Gone are the days when we just used to look after numbers. Numbers will tell you discipline, Sumit, but numbers would not tell you the future.
Future, right?
Right? Numbers would always be for the past,
Right.
right? So they would tell you how disciplined the organization was, but they would not tell you about the future.
Future, right.
And
Right.
the person who has the capability to dissect those numbers, to do the analysis in terms of how the future looks like, and of course take the judgments, is where the person would be either a successful person or he
Remaining
would
to the
not be
accounts part.
correct. So if you are a successful person, if you are able to demonstrate that you are that value creator for the board, you are that value creator for the CEOs, right, then the sky is the only limit, and you have immense opportunity in the area to grow yourself and to make a great careers in finance. So I think the opportunities are immense. We just have to grab it at the right time with the right attitude and with the right passion to make it happen.
Definitely, because even I see that there is a lot of opportunity and finding a resource is still a problem. So I think so with a good mindset and with the contribution attitude, I think so people can join and they can grow extensively in in this field as well.
Yes. Yes.
Okay. So as a outsider, when I deal with a finance team of a bigger companies, I always see a finance team or a finance person coming and negotiating even after completing the projects. Also we have seen that project तो complete हो गया, ये quotation था, now हमको कितना दोगे. So there is always a fear or a anger, or I cannot express what it is, when a finance person calls a vendor कि अब negotiation होगा. But do you think that that is the only thing that a person is supposed to do? Because I have also been talking to many organizations, big organizations, where they have mentioned that when a vendor joins, they give a lot of very good quality and everything, but after 1 year they don't perform. As a vendor, I see it's a finance problem because we cannot make profit, so we cannot give justification to that. But this is happening. So how do you see this in your perspective? How this is shaping the companies? Are the companies failing because of it? So what is your perspective on this?
It's actually unfortunate, and what you said is right, Sunit. Most of the finance professionals are seen as cost control guys. And hence when you do a negotiation with the vendor, it's only about price, right? Now ये हमें भी पता है, आपको भी पता है कि beyond a point the vendor would not provide you a service if he or she is not making money. Everyone has to make money. He's into a business, you are into a business, right? So it's very natural that if the vendor has to make money, he can't go beyond a certain rate or a certain price point. But when the finance guys comes and presses him down to further, reduce the cost, then of course the only way he can reduce the cost is by doing a compromise on the quality. Correct. And that is where I said it's unfortunate that finance guys are always seen like this. Believe me, in my 20 plus years of my experience now, I have never done that negotiation when it comes to a compromising the quality of the services or the quality of the product, right? I would rather recommend a vendor who probably would be slightly costlier, but his quality of either the services or the product would be much better than probably what a cheaper vendor would do, cheaper in terms of the cost, right? So for me, the value proposition which the vendor is bringing to the organization in terms of the quality of the services, the quality of the products, stands more significant than the cost. And that is where it's unfortunate, as I said, that we guys are always seen as someone who's like coming and cutting the cost, which many of the finance guys does it. But if you have to be a navigator, you just have to be not just about numbers, but you have to be beyond that, and you have to also give weightage to the quality and not just the price point or the cost element. So the finance guys have to find a way to find a balance between the two, and hence choose the right partner, because again, organization from a long term perspective, the organization has to sustain, and for the organization to sustain, the entire ecosystem around that organization has to sustain, right? The vendors with whom you work, the customers with whom you work. So if you are growing and your customers are not growing, you will see attrition in your customers, right? Similarly, if you are growing and your vendors are not growing, you will see attrition in vendor, right? So the finance guys have to find the right balance between selecting the right partner who can actually provide the right kind of services to the organization, and selecting the right partner with respect to the costs. So there has to be balance. It cannot be either one, right? And that is where I think, again, I said it's unfortunate that finance professionals are always looked into as cost-cutting professionals.
Thank you for sharing that perspective openly, actually. So, is there any small trick when you're sitting as a vendor to negotiate with a finance officer from the other company? Anything
don't
that you can
inflate the
advise?
cost. The only advice which I can give as a vendor, that don't inflate the cost. Finance guys are very sharper. They would pick up sooner or later that the cost has been inflated. Focus on the quality, and that is, I think, the biggest USP of the vendor. Tell the organization that what you are giving cannot be given by anyone else, and hence why the organization should choose you, not just about cost. So my word of advice to the vendors would be, don't focus on inflating the cost and then doing the negotiation with the finance guy. Tell the finance guy that what is your USP, what is your quality of the products and the services, and why you should be chosen over others. And if you are able to crack this code, I think you have finance teams along with you.
So I think so this piece of advice would be useful for many audience listening to this podcast, I guess. Thank you very much for that. And because I will tell you my experience, it has become a thumb rule. Whether if finance guys are listening, it's okay, I guess. Quotation देते हैं ना, तो we inflate it because we know there has to be a
ये बहुत
negotiation.
कॉमन है सुमित.
और उसके बाद क्या है ना कि जितना हमको चाहिए ना वहाँ पे आके वो बैठ जाता है.
See,
That's how, because there is no choice. Like if you give the cost that I want, that I am comfortable in working with, which gives me some margin, उसके ऊपर अगर negotiation हो गया, तो प्रॉब्लम है.
हाँ, ये नो ब्रेनर है सुमित. इसके लिए मैंने बोला, कोई भी बिजनेस सस्टेन नहीं करेगा अगर आपका वेंडर्स जो आपके साथ काम कर रहे हैं वो पैसा नहीं कमाएंगे, अगर आपके कस्टमर्स जो आपके साथ काम कर रहे हैं वो पैसा नहीं कमाएंगे. एवरीवन वांट्स टू मेक मनी. They want to get associated with you because they also want to grow with you. So if they don't grow, if they don't make money, they would not be able to help you or sustain or
help you also to grow the
or they would not be able to take the path along with you for a long term. Probably for short term वो लेंगे because उनको कई बार vendors को brand चाहिए होता है, right? And in my earlier experiences, because I have worked with big brands, I have seen that vendor would go to any level to get the brand name associated. But वो longer term पे नहीं चलता है. It doesn't happen, right? Of course, on a long term basis, you need quality, you need the best of the best products to cater to the requirement. And इसके लिए ये finance teams को भी पता है कि एक level के नीचे cost को आप reduce नहीं कर सकते. You can't reduce the cost because then it starts getting compromised on the quality.
Right. So to share one example, actually, my experience when it comes to finance, actually. The lowest value that I got for my services was from a biggest MNC in automobile in India. So उसके बाद हमने MNCs को pitch करना ही छोड़ दिया. Let them have and enjoy their work. I said, हम नहीं काम कर सकते उनके साथ. Because even from my fellow clients, actually, that they are working with another big companies, they have been so much pressurized that they see that what is the procurement that you do for the raw material, what is the running cost and what is that, and they decide what is the profit they are going to earn out of it. I don't know, this is something that is problematic, and many people have stopped working with big companies now, actually.
So that is actually a problem, and that is where the change management is happening, because this is very common, right? If I lose a good vendor because I have pressurized the vendor to a point that he is not able to make money and he decides to part ways with us, then the loss is mine. If the vendor has a good product, he will find a new client, but I would not find that vendor, right? And I think sooner or later organizations have started realizing this, that cost control करके एक level के नीचे आप नहीं जा पाएंगे. If you go beyond that level, you would either lose a vendor, as you said in your case that you stopped working with an MNC, or you would lose the quality which you want, right? So ये realization is now happening. In many companies I see that people are now talking about quality of the product and not just price of the product. in terms of the vendor negotiation, and hence sooner or later this thing would also change, that you squeeze the vendors to a price point where they can't work. It would not be a sustainable thing. It can't go perpetually.
Because this squeezing thing has percolated so deeply in the system that when you are working with a big MNC, they are squeezing the vendors, and because of that they don't have a choice to squeeze again their labors and everything. So it's a cycle which is deteriorating everything. And when we see the same, for example, there is a company who is typically working with an Indian company, and there is a B company who's specifically working with a foreign vendor. They are well paid, and the supply chain, entire people that they are working with, they are well paid. That is the difference that we see, and that's the reason still, given a choice, people tend to work with foreign companies rather than Indian companies. This is my perspective. So do you think that this is correct?
To a very large extent, this is correct. And again, many people still see, or many organizations still see, vendors as one area wherein they can make P&L profit. They can squeeze the vendors to make P&L profit. But as I said, Sunit, these things are now changing. More importantly, post-COVID, a lot of things on the cost side have happened, and now organizations have realized that beyond a point you can't have scenarios wherein your vendor is not able to sustain the business. Again, think of it, Sumit. You gave your example that if you are a vendor who has a great products or a great services, and if because of the price point you decided to not give those products or services to a company, I think the loss is not yours. The loss is for the company, because they are losing a good vendor with a good quality products, right? आपको तो कोई दूसरा client मिल जाएगा. You will get some more client because your quality of the product would speak for yourself. But the organization would not get a good vendor like you. So ये relation, this is happening now. Of course, it's a slow process, because still, Indian companies के mindset में cost element still weighs very heavy, rather than the quality of the product. But this is now changing, is what I can say.
Because this will also affect their growth, and they won't be able to compete with the foreign companies that are coming in so aggressively with everything well established, with more funds, and hiring the same person at double the cost.
Yeah, absolutely. See, at the end of the day, you have to be competitive in the market. Your products have to be competitive in the market. If you have a compromised quality of the product, then customers आपके प्रोडक्ट को खरीदेंगे नहीं, या वो आपके प्रोडक्ट को खरीद के रिपीट परचेज नहीं करेंगे. They will not do a repeat purchase, and hence you will start losing the business. So ultimately it would start impacting your business for sure. In a longer run, you will lose to your competition.
Right. And another way of looking at it is, once, as per my perspective, sometimes people want to work with the company because at least they are able to run the company, but they will never deliver the quality that they are expecting, because many vendors that I have negotiated with, कि हमको प्राइस कम कर दो, this guy is giving me at this cost. Then I said, you go, नहीं आप भी कम करो. Why नहीं काम करो? What I want to reduce in exchange of that? Nothing. So this is the hardest negotiation I had once. So that's the reason I was trying to share this. So we said that you negotiate on this, I will negotiate on my time. I will not work. I will not deliver the quality of work that you deserve. That's what I can do.
Again, so बहुत interesting आपने story समझाया. And if you are a businessman, I'm sure when you run your own company, you have a great business mindset. Let's say if I am the negotiator, I'm the finance guy, you are the vendor, and आपको you have one experience with me saying that I squeeze you to a limit wherein you can't work. Now next time अगर मैं आपको if I call you to the negotiation, what you will do? You will simply inflate the cost, right? You will say, okay, this guy would always bring the cost to whatever I quote by 20%. So you will do the inflated price of 20%. Yeah. And that's the bigger dilemma, because you never know what's the right price. Correct. So as an organization, let's say आपने 40%, the example which you gave, you inflated the price by 40%. And I negotiated at 20%. And I'll be happy saying that, you know what, मैंने 40%, मैंने price को 20% कम कर दिया. But on the contrary, I'm actually paying more than what I should pay, because आपने already इसको 40% inflate किया हुआ था. So in a longer run, and again I keep reiterating, in a longer run, the organization would sooner or later realize this, that cost is directly proportionate to the quality of the product, to the quality of the services. So अगर आपने cost एक level के beyond कम करेंगे, it would start impacting your quality of the product, and it would impact your positioning in the market.
Right. So thank you for giving this perspective. Actually, this was very interesting and also educational for me also. So now starting coming back to the startups actually, where many startups they start bootstrap and they don't have a capacity to hire a finance guy, specifically a dedicated finance guy. Many of the companies they have someone who just prepares bills and everything is done by their chartered accountant. They don't have anyone else apart from the person who is sending invoice and receiving money. So at what stage do you think that it is appropriate for any startup to have a dedicated finance person, not an accounts person?
See, this is a typical situation wherein the founders have this dilemma ki bootstrap may how much they can invest in the capability of the team. When you say that you hire a chartered accountant or a finance person, it's about how much you're investing in the capability of the team, right? Vis-a-vis a fundraise, let's say when the fund comes in and then you invest in the capability of the team. I have a very different view, Sumit, on this, right? As a founder, there are three things which I view any founder should do, and accordingly, the decision to hire a right finance guy would come in. First and foremost, the founder should always look into a product innovation, the market fit of the product. If you don't have a product, you can't do anything, right? So the first focus should always be on the product market fit, and I think uh, at the bootstrap level, that's the most of the founders does that, right? Because they have their own money, limited money, and they would want that money to give the maximum return in terms of the availability of the product or the finding the right product fit for the market. Once you have the product fit, then you should start investing into the capabilities of the team, because imagine a scenario wherein you have a product but you don't have a team to sell the product to your end consumer. Then no matter how good your product is, no matter how good product fit the product is, but if it is not reaching to the end consumer, it is of no use, right? And that is where I think the startups or the founders have to have that mindset that there's a right product, they think that the product can work beautifully in the market, then you start investing in teams. Of course, uh, when you start investing in teams, there is always a priority that you give priority to the teams who are more nearer to the consumer, which is the sales marketing team, and then you start giving priority to the teams who are your backend support, like the finance, HR, operations, right? So it's a tricky situation. It's not, there's nothing right or wrong, depending upon what stage you are in is where I think you should be deciding to hire a finance guy. My only limited submission here, Sumit, is that uh, don't hire a finance guy, or don't uh, take the views of the finance guy to validate your idea. As I said in the earlier part, you hire him or you take his views to shape the idea. And if that's the mindset which the founder would have, I think he or she would take the right decision to hire the right guy to navigate that ship. As I said, you need that navigator, held someone accountable to navigate through a compass, and then you do a voyage of your journey. So
Because everything comes down to a person. If the person is good, so one quality that any person who is hiring a finance guy should look into the person, finance person. One unique quality that you recommend that this person, a finance person, should have this one quality.
I think the
Apart
ability,
from numbers,
yeah, I
apart
think,
from the basic that is required.
yeah, I think the ability to decide with incomplete information. I think
Okay.
that's the biggest ability a finance guy should have, and if someone has it, then he or she should be the right fit, because you can't wait for 100% of the data, 100% of the numbers. You have limited set of information. How do you decide and move forward? I think if someone has that ability to take that judgment, is where the differentiating factor would come in.
Thank you for that input. Actually, wonderful. Interesting. So moving on with the next question. Actually, again with the startups, what is the one biggest financial mistake that do in their initial years, according to you?
I think the biggest mistake which the founders does in the initial stage is they just chase growth. They just chase the top line numbers, even without understanding that whether the organization has the capability or the systems or the processes to tackle that disproportionate growth. I think that's the biggest mistake. In my view, the growth has to be sustainable. So the founders have to look into a profitable growth and not just growth. So if I were to identify a single biggest mistake in the Indian startup ecosystem so far, I think that's what I would call it as, chasing the growth and not profitable growth.
When it's a good time for a startup to raise funds actually?
uh, Again, if so there's no right time as such for a startup to raise funds. I think it is all it is all about what your product is. It is all about are you able to cater to the requirement of the consumers of the market, and uh, is your organization capable to handle the next level of growth, right? So in my view, the sequence has to be that first you do product innovation, then you invest in the team capability, and once you do that is where you do the assessment that whether your organization is now ready in terms of systems, in terms of processes, to cater to the next spurt of growth, to cater to the next level of growth, right? Once that happens is where I think you should, or the founder should, start looking from a fundraising point of view. uh, Capital allocation is always about character. It's not about, it's not about just raising the funds, right? More often than not, if you don't have the right systems, if you don't have the right teams to cater to the kind of growth, fundraising becomes actually a problem, because you spend more money for the same mistake which you do, right? And that is where the dilemma of a founder comes in. So as I said, if the organization is product innovative, it's capable from a team's perspective, is capable from a systems and a processes perspective, is where you should start looking from a fundraising point of view.
And from an investor's perspective, what they look into the company actually when they're investing?
Very interesting, Sunit. So investors, of course, they look into financials. That's the core, right? So they look into your P&L, they look into your balance sheet, they look into a cash flow. But more interestingly, they also look something which is not in your balance sheet. They actually find things which are not in your balance sheet. For example, talent. Talent, you can't put it on balance sheet, right? But they would see that if the organization has the right team to take the organization to the next level. So talent, for example, culture. Now again, you don't see culture in P&L, cash flow, balance sheet. They are not financial numbers. But when the investors decides to put money into a company, they also see whether the culture of the company is good enough or not. Because again, culture is for a long-term value creation for the organization. So they look into it as one of the key elements when they decide to invest in a particular company. Again, so these are some things which are not part of the financial statements. Of course, financial statements becomes the core. They see the financial performance, but what they also see is beyond financial performance, like people, like culture, like ability of the organization to navigate into a difficult terrain, is what the investors look like typically.
Okay. So now, as we are into intellectual property rights, and as as per my experience, I have spent 22 years in this industry, and my assumptions are that IP in India still it's look into as an expenditure where they can get some tax benefits from the government uh, as a R&D investment. That investment is used for patents and R&D. Beyond that, uh, it has not been valued as an asset. Valuation part, it's still intangible, I can say. Why? Because if the valuation is done based on how many number of products are being sold, that will be a wrong valuation.
Correct.
Because IP creates an entry barrier to the competitors.
Correct.
It has capacity beyond it.
Correct.
But I think so still holistically as a country, we are still not able to grasp that potential of IP, not only from finance perspective, but from other growth perspective also. So what is your experience on this?
So you are absolutely right, Sunit. Unfortunately, currently in the Indian context, IP is not seen as an a benefit which can help the organization for a long term. As you said, rightly said, IP actually can help you to create those entry barriers from a competition point of view. Uh, product innovation are always useful for any organization to define uh, where their path would be, right? So these are some things which are very, very important, but unfortunately companies don't spend too much either time or the money to secure either the IP, or let's say in many cases even the product innovation pipeline is not too large, and they only react to a competition when they see something, some new product coming up in the market, and that is where I think they lose that edge, they lose that time, because your competition product is already there in the market,
right?
and then you are reacting to it. Of course you lose money, you lose time, you lose competition, you lose your consumers, and hence there's lot many things which a company can lose, or rather they lose in the current context. So yeah, what you said is right, that in the Indian context they still doesn't hold too much of value, but I'm sure as the organization matures, as we move towards the matured markets, as we move towards the developed nation, these things would start getting picking up. I already see early signs nowadays. For example, even startups talk about IP. Even they talk about doing the patenting at the very early stage. Uh, uh, I have seen cases wherein even when the product is at an innovation stage, organizations now rush to do the IP, to do the patent, because if the product successfully passes the test, then they secure that patent right, they secure that IP right. So there's a lot of awareness nowadays in the Indian industry, and I'm sure it's only going to pick up from there. So yeah.
So, as per your understanding of the entire industry in India, what one scenario should happen which will trigger the prospective change of the companies towards IP?
I think one thing which I already see happening is a lot of companies now have started focusing on IP. And if you start focusing on IPR, if you start focusing on patenting rights, I think then as an organization you avoid a lot of litigation going forward, and that is one thing which is of immense value to any organization. India is a very litigative market. If you go outside India, if you talk someone from outside India, they would say it's very tax oriented market, it's very highly litigative market. So you'll have a lot of litigations if you don't have the right IPR at the beginning, and hence if the organization start taking this IP thing very, very seriously at the inception, at the product innovation itself, I think then they would avoid a lot of they would avoid a lot of future litigation. Also, one more point I would like to add is that a lot of foreign companies who want to do business in India, they come with a lot of these patent rights, and and in many cases those products are already available in the Indian market, but because organization doesn't spend good amount of time and money to do those patenting, is where they lose that product to that foreign company. So if Indian organizations start looking into that perspective, I think they would also to some extent create a barrier for the foreign organizations to come and launch a product which is already in the Indian market. So I think these are the two biggest things which can happen if the organizations start looking into IPR at a very early stage, or at a very inception stage.
Right. Because why did I ask? Because we don't have our mobile manufacturers. There was one who vanished.
Yeah.
We don't have a TV manufacturer. India don't have a company who can produce their own cameras. We are highly dependent on foreign countries. And we have automobile manufacturers, we have EV manufacturers, but still foreign companies are entering. So that's little not a good scenario to see.
Yeah. No, very relevant, very relevant actually.
So as we are in the age of AI, earlier it was 2K, then now it's AI. How do you see AI as a threat to the finance professionals, or it's helping finance professionals to accelerate or do better decisions? What's your take on this with AI?
So that's a very common question which is being asked to me in many of the forums wherein I go, and probably I have a very differentiated view, probably a contradictory view to what you probably would hear from many of my other colleagues in the industry. To me, AI is the biggest opportunity in the last, let's say, decade or so, which the finance teams have got, right? Again, you think of finance, what they do financial reporting, they do heavy data crunching, They work with numbers, they collate lot of numbers, lot of data, and then they do the reporting. And most of their time is spent into all of this, because many companies, let's say who are listed companies, they have a time bound manner wherein they have to publish the results to the stock exchanges. So there is a limitation of time, and because of that, the finance team doesn't move, beyond the financial reporting, beyond the collation of data, and that is where they lose. Sometimes they lose the relevance because they have much more capability. Now with AI coming into, lot of these low value added work, like data collation, putting up the data into a particular format, let's say for a monthly reporting, or for a cash flow understanding, that all tasks are now being handled by AI, which means that the finance team's bandwidth is currently released to do things which they otherwise couldn't do.
Okay.
Right. For example, the predictive forecasting, for example, reacting to a competition in the market in the month itself, not wait for the month end to happen and then the numbers to get reported. And that is where I keep saying that with AI, with technology, there is probably the biggest opportunities the finance teams would have seen in the last decade or so, that the low valued tasks are being done by these tools, and hence the finance team's bandwidth is now released to do valued tasks. And for that, they start creating value not just for themselves, but for the organization as well. So that's the single biggest opportunity I see with AI coming into.
So it's an opportunity, not a threat
It's
to the
definitely an opportunity. It's not a threat. The only challenge is that you have to learn to work with AI. If you don't learn to work with AI, AI is not going to replace you, Sunil. But AI is going to replace someone so you are going to replaced by someone who's actually learned to work with AI. So AI will never replace you, but you would probably be replaced by someone who knows to work better with AI than you. And that's the only threat which I see. But from an overall perspective, it's the single biggest opportunity in the last couple of decades, probably the finance team would have got.
Great, thank you for that input. So moving on to the last topic actually. So what are the 3 financial habits that every entrepreneur should have?
The first and foremost, use your cash wisely. Cash is king. If you do a revenue and you don't realize that revenue in your bank account, that revenue is of no use, right? So sale without cash is of no use. So first, preserve cash. Use your cash very, very wisely. The second financial habit which I would recommend to any entrepreneur would be, you invest your money into your product innovation, so that you have the right product to cater to the market, right? So that's the second thing, because innovation typically is not a priority list for many of the entrepreneurs, right? So innovation should be the priority list, because that's where you would create a differentiating factor for your product or for your organization. So that's the second financial habit. And the third, which is very important financial habit, is, as I said in the part of the podcast, that don't just chase numbers, chase profitable numbers, right? So if you do this, I think you are on the right track to have the financial stability for your company, for your organization. And once you have the financial stability, I think your organization has a long term value, and you can sustain your organization for a very, very long period of time.
As per your perspective, what is the one business myth that you strongly disagree with?
Very difficult question, Sunit. But one myth which I strongly disagree with is that, growth at any cost, right?
Okay.
And that's the one myth which I want to disagree with. Growth without profitability in mind, without culture in mind, without the organizational capability in mind, whether the organization is capable to tackle that kind of growth. Without all of these elements, growth is actually a destroyer. It would destroy your culture. It would destroy your cash bank balances. It would destroy everything, because you are just chasing growth at any cost. And that's one myth which I want to, strongly disagree with.
Great, thank you for that. It was good. With it was interesting discussing with you on all financial aspects and understanding what exactly is going and what are the opportunities and how we can improvise. So coming to the last part of the podcast, which is rapid fire. So ready? So you get
Yes.
only 15 seconds to answer.
Okay.
Start.
Okay.
Okay. Profit versus growth. What will you choose?
Profitable growth.
Okay. Bootstrap or fundraising.
Bootstrap.
Any reason for that?
It it teaches you discipline, because bootstrap you use your own money, so you have far more discipline than raising the funds.
Okay. Data or intuition? What will you trust?
Intuition.
Okay.
You have abundance of data, but
Okay.
intuition is what would differentiate you from a good leader to a great leader.
Great. Biggest quality an entrepreneur should have. One biggest quality an entrepreneur should have.
Trust. I think if you have trust on your people, if you have trust on your product, if you have trust on your processes, I think you are creating a value for the organization.
One book every founder should read.
Of course, leading beyond numbers.
So
I
this
would
is
always
interesting book, I
yes,
guess,
yes,
to read.
yes, yes. So this is a book which I would recommend every founder should read. It's beyond numbers.
One piece of advice you wish you have received at the beginning of your career.
Uh, I wish I would have received this advice at the beginning of their career, that don't just be a guy who works on a spreadsheet. Be a guy who can understand the business, right? So if you hit the market, if you work with the field teams, if you work with the marketing teams to understand how business is being driven, to understand how business is being done on the field, then your entire perspective of how the organization looks into a particular function or a business is very, very differentiated. I wish I would have got this advice in my early stage of my career, even though
Okay.
I got this advice during mid of my career. But if I would have got this advice at the early part of my career, probably I would have accelerated my career a bit more. So
Thank you for sharing that. I think so the people who are watching this podcast, it will
yes,
be useful for them.
yes.
So coming to the last part, what will be your final advice to the all entrepreneurs and founders that are watching this podcast? One final advice.
I think I spoke a lot about how the entrepreneurs or the founders should see as a finance. My take from the entire session is that please do not see finance teams at the end of the session, at the end of the the process. Please see them at the beginning of the process. I think that's the single biggest differentiator any good company would have. That if you take finance into confidence at the beginning, as I said, they would help you shape the idea. Do not use them to validate the idea. So I keep repeating that, but I think that's the single biggest thing which I would recommend to any entrepreneur. Treat finance as your second partner. Don't treat them, and unfortunately, it happens in many organizations that finance is always kept in dark, and they are always reached when it comes to P&L, when it comes to budget, right? And that's the unfortunate part. So if you can make a finance team or a finance partner someone who can work shoulder to shoulder with you, I think there would be immense benefit which the person would bring to the organization. So think of finance at the beginning, don't think of finance at the end.
Thank you very much for your time on this podcast. I have learned a lot of things. I think so audience would definitely implement these financial disciplines that we have discussed in this podcast, and definitely they will look into more profits than growth, as you mentioned. Thank you very much. Thank you for this.
Thank you so much, Sumit. I really enjoyed talking on this podcast. It touched upon a lot of my memories of my, early days, how I shaped my journey. Thank you so much for recreating those memories for me, and I really hope that your audience would get immense benefit out of this podcast. And I wish you all the best.
Thank you.
But
Thank
thank
you.
you so much for this opportunity.
Thank you. Thank you. So, if you have liked this podcast, don't forget to like, share, and subscribe, and to share it to people who need it the most. And also, write in the comment box if you want us to cover any other topics that are essential for your business. So, keep investing, keep inventing, and keep earning tremendously. Thank you. Namaskar.